Hi, this is Krishna Merchant, and thank you for joining us for the corporate roundup. It was a week full of earnings with L&T announcing their March quarter numbers, and the earnings season is almost about to end. We have with us Madhura Karnik on Larsen and Toubro. Hi, Madhura. Larsen and Toubro reported better than expected results with 71% jump in net profit. So, tell us, what was the reason? L&T performed so well, and what is the road ahead for the company?
Hi Krishna. So basically, this huge jump in net profit was due to the pickup in infrastructure orders that has been that we've witnessed in the past few quarters. So infrastructure orders form around 80% of their entire order book and order inflow, and they have really propped up margins. And the management there is really very positive about the future because of a government change, and people are talking that many projects which are stalled are going to get moving. So that is good news for infrastructure companies, especially L&T. And they have a reasonable guidance number that they announced today. So for the next year, the order intake guidance is around 20% higher than the previous year, and revenues would be around 15% higher. So these are a set of healthy numbers. Analysts are really happy about the stock, and the chairman A.M. Naik himself was very positive. So we'll have to wait and watch how this company is going to scale some new heights.
Well, Larsen and Toubro stock ended flat today, but we need to watch out on Monday how the stock reacts to better than expected results. Moving on to another sector, metals, which was also in focus this week with a number of companies announcing results. We have with us Ruchira Singh. Hi, Ruchira. Some of the metal companies announced their March quarter results. Can you tell us how are they, and what does it indicate about the demand outlook and also the pricing outlook for these companies?
So we had JSW Steel and Hindalco declare their fourth quarter earnings. If you look at the net profit, we had mixed trends. While JSW had a 4% increase in its net, Hindalco had a very substantial drop in its net profit. Net profit fell by about 49%. Now, both the companies used volumes to push their profitability. They produced more and they sold more, and Hindalco, despite the very severe drop in net profit, managed to have decent operating income. Common themes, both the companies saw a very sharp rise in their finance costs, in their depreciation, and also in their energy costs. And of course, the debt levels remain high for both these metal companies. Markets continue to remain weak. Demand is slow in India, but there is a hint of recovery overseas. So these companies are looking towards this kind of a recovery.
Thanks, Ruchira. That was mixed results for the metal sector. Another sector which was in focus was auto, with both Tata Motors and Mahindra reporting their March quarter results. We have with us Shelly Seth for the same. Hi, Shelly. Both the auto companies reported March quarter numbers. How are they, and what does it indicate about the demand environment for the car makers?
Well, Tata and Mahindra, they are both not strictly comparable. As you know, the Tata Motors derives almost 100%, more than 100% of its profits from its British subsidiary, Jaguar Land Rover. So, as far as the consolidated performance of the company is concerned, it lagged the estimates. GLR did not perform the way analysts had expected it to perform. It was largely to do with the overall sales mix getting poorer, and it was also a function of a one-time cost that was incurred by JLR for issuing fresh bonds. Also, the overall earnings of Tata Motors got singed by the dismal performance of the domestic operations. We saw the losses getting widened to 817 crore in the fourth quarter, and analysts don't have any hope of the company recovering anytime soon. The company is hopeful, Tata Motors is hopeful that domestic operations, especially the truck business, is likely to look up in the second half of the current financial year as the infrastructure projects pick up and the government starts taking bold initiatives to sort of kickstart the economy. As far as Mahindra is concerned, net profit at Mahindra and Mahindra, it rose marginally by 0.86%, and it was largely a function of a robust volume growth that the companies saw in its tractors. Sales of utility vehicles and other automobiles for the company remained an area of concern. They have not been able to do really well as far as the utility vehicle is concerned, because Mahindra continues to have a reliance on the traditional UVs, the market in the UVs have shifted to compact SUVs. So the company expects sales to start looking up with 2 new launches that are planned in the next calendar year.
So thank you, Shelly. Auto sector again, the results were not as great as expected. Another stock which was in focus was Jet Airways. It reported its widest ever loss in the March quarter on back of higher interest cost, jet fuel prices, and also an inability to hike prices as most of the airline companies are actually cutting prices to customers. That is all for today, Corporate Roundup, and thank you for joining us.